What's up everyone and welcome to the channel. So in this video, I will be covering the pros and cons of a decentralized exchange. Now, obviously this article is 3 days old, depends on when you're watching it. I'm kind of recording it on the 20th of November. I kind of want to see the situation first before I kind of make a kind of assessment on it. Now, I did a video about decentralized exchanges quite some time back. Why I'm kind of like, I'm not negative, I'm kind of neutral, but I don't use decentralized exchanges. Now, the reason is very simple: liquidity. At the end of the day, liquidity is a big part of any exchange. Now, I feel that as more exchanges, especially centralized exchanges, are very stringent on their KYC, right? Meaning that know your customer. So as a user, right, you want to have the freedom and ability to buy and sell your tokens, Bitcoin, Ethereum, whatever cryptocurrency. However, as we all know today, it isn't easy to kind of set up an exchange account, especially with either Binance, Huobi, Coinbase. They kind of will ask you for the full details. For example, your passport, your identification card, where you live, right? So all these things are necessary now, especially if there is a fiat pairing, right? So if you want to remain relatively anonymous, I feel that decentralized exchanges are still the best way to go. However, liquidity is always a problem. Now, with the ability of now we are going to be talking about the fact that do you have enough liquidity on your exchange? So Uniswap lost 45% of its liquidity when its rewards program ended. What does this show? It just shows that there's still a lot of speculators in the market, right? And especially, it is a very new platform. It's only 2 years old, right? And I think it's pretty commendable that it's still having at least a billion, I think 1.6 billion in terms of liquidity. Let's check. Yeah. So it has 1.64 billion in terms of liquidity. And that's already pretty impressive, given for the fact that our market cap, as in overall crypto market cap, seems to be only about, we're looking at the overall crypto market cap, I think, is reaching 500 billion. Okay, so a decentralized exchange like Uniswap, which is the largest, by the way, is having 1.64 billion, which isn't too bad. Now, the problem, when you are buying it in large quantities, or a particular token in large quantities, it isn't that fantastic. Okay, so if you are buying, for example, Ethereum, sure, it has a decent amount of liquidity. But overall, if you look at the volume, right, it is very, very small. It's like 245 million in the past 24 hours. And then after that, the next would be US dollar Tether, USDC. This is by ranking, by the way. You have Wrapped BTC. And then you have DAI, stablecoin, and you have Uniswap coming in at 20 million, okay? Whereas if you look at Binance, now Binance obviously provides quite a lot of liquidity. But if you look at the order books, the orders are not that fantastic if you look at it. Like if you're buying a Uniswap token at the moment through Binance, you're seeing for the fact that, okay, see, like for example, the largest order here is $1,959. Then comes in, another order, it's not like 5, 10, 20,000, that kind of thing. But for crypto, it's already relatively large. It's still pretty decent, okay? So if you are someone who's trading between anywhere from 5 to perhaps 10K, that's okay. But if you're trading 10K to about 100K, that's a totally different story. From there, you would probably need bots on, and having the bots connected to your to Binance or Huobi to allow you to kind of separate your orders, or at least dissect your orders into smaller orders. That way you can gradually fill up your orders, whether buying or selling. That way you don't trigger the bots to kind of work against you, whether is it for buying and selling as well. Whereas for a decentralized exchange like this, there's no way that you can do that, right? It's a swap, and that's how it functions. Like you're not price sensitive. Let's just be frank. You're not price sensitive. You just want to buy that token. And where do I eventually see this going? Okay, let's just put it this way. People who are buying a token, right, for speculation, there are two kinds. One, they are so-called having the investor mindset that somehow they got maybe a report, or they have a belief that this particular token, let's just say Uni, guys. Let's just say Uni. Uni will reach $5 to $10 in the next 6 months. Let's just assume. Okay, I'm not giving financial advice. I'm just stating an example. So let's say they have the belief that Uniswap will go to $5 or $10 in the next 6 to 12 months. So they buy Uniswap today at whatever price with Ethereum, USDC, or whatever pairing that they have, okay? Or whatever cryptocurrency they have, they swap directly and that's it, end of the story. Whereas people who already know how to trade, who already understand basic technical analysis, right? You will kind of want to pick the best levels, the best entry, and then you are a little bit more specific. Hence, you put in your limit orders. Okay, so kind of like the whole mentality is very different. Okay, there's both sides of the story are fine either way. I think at the end of the day, if you have a little bit more time on your hands and you have already understood how to trade from a technical standpoint, naturally you are at a slight advantage, right? But it doesn't mean that the person who bought directly from Coinbase, by the way, all large exchanges actually have the market buy order, which is no different from what a swap is, in my opinion. The only difference is that, of course, you're just swapping from wallet to wallet. There's no actual deposit into a central address. Hence, that central address on certain occasions can be compromised. Now, there are certain things that you can also have to be wary of when you're using a decentralized exchange, because you would have to pair your wallet, right? Your private wallet, your crypto wallet with an off-chain crypto wallet with either MetaMask, Coinbase, or whatever. I think for a fact Uniswap can do Coinbase, MetaMask. Okay, then from there, what you do is that you connect and then you link up, and then it will connect you to Uniswap's exchange. But take note, you have to be very careful on the link that you click on, right? Because that link, if let's say for example, I'm just giving a possible scenario that if let's say the website is compromised, and that means the link is the link that you click on could be hacked and replaced and then all it has to do is replicate a MetaMask looking website or whatever, and then after you key in your password, you transfer your coins to that particular wallet unknowingly, and yeah, that's it. You already lost all your coins. So there are these little things that you have to take note of before you use before you link up. But other than that, as long as you're careful and you check the URL address before you send, and of course always try to send a little bit across and not the whole chunk, right? You test a little bit to see whether, okay, did this particular amount go to this address? If everything is good, okay, then you continue to proceed with your transaction. If not, don't be too eager or anxious. Hence, I think you always have to check the URL addresses, especially the main, for example, main Uniswap address, kind of remember it, because on Twitter, I think Leon Fu, the legendary Sifu Leon Fu, right, from a cryptocurrency market together with Tizen, even he was so-called scammed a little bit, right? Not that he got scammed for his whole amount of ADA, but what happened was he kind of looked at the CoinDesk link, I think, and then from that CoinDesk link, it linked to another address and then to another address. You can check it out on his Twitter, by the way. He actually shared it, and thankfully he only sent a little bit of ADA across, and he caught it, and then of course he was putting out the post just to share with his his followers. So I think it's very important that people who are already very experienced in the space can occasionally slip up, and it's human to slip up, by the way. And even they can slip up, but at least they are smart enough to say, okay, I'm gonna just put in a very small amount and send across and see what happens. People who are emotionally triggered by, say, wanting to buy or sell a cryptocurrency could actually shift the whole lot over without double checking on the URL addresses that they are clicking on, and that would easily cause them to lose all their tokens. So just take note. So anyway, from a technical standpoint, what have I been doing? So Uniswap, I was more on the short-term trading mode first, because clearly, right, I knew that there will be the end of the rewards that happened, I think either probably 3 days ago or 4 days ago. Okay, from there I knew that, okay, for a fact that if everything ends on the 17th, people who are, or so-called the liquidity providers who feel that other decentralized exchanges could give them a better return, they would definitely move. It's no different from you as a fixed deposit, a person who loves fixed deposits, right? You jump from one bank to another, just making sure you're getting the best rate, right? Even if it's a 0.5% or 0.2% better than your existing bank, you will definitely just jump. There's zero loyalty in this space. Okay, I don't expect, like, for no reason, without a new rewards program, the liquidity providers will just stay. To me, the liquidity providers that are still there, right, are obviously very tied to the project, meaning that they are business partners to high level investors, whereas the majority, where literally I think you had quite a big drop, right? You had a big drop in liquidity. So it was initially 3.36, and then now it's 1.64. So you are losing 50% of your liquidity just like that. Now, a good exchange should never function this way. Hence, you always want to have that loyalty. But a decentralized exchange obviously probably has it's different, it's governed differently. So who knows? Maybe once the token has a certain level of governance, the liquidity providers who own Uniswap tokens will say, okay, now that I have a say in the way the platform functions, I have more incentive to stick around and see whether I can make my point or my proposal be heard. Everybody wants to be heard, guys. There's no such thing as, that's why when we all talk about decentralization and the freedom, I wouldn't say it's bullshit, but I say it's very hard to do, because everyone wants to stake their piece, and whoever puts in the most money wants to be heard and have the control. It's very, very normal. There's no such thing as the majority, the minorities are gonna have a say or whatever, because the minorities are holding very, very small amounts, and even for some reason they could collectively come together. How do you collectively come together when there's no way to chat about it? There's no way to kind of put your piece across. You know what I'm saying? Like, it's not like, okay, there's a Uniswap Discord. Okay, and within that Uniswap Discord, if there are discussions about this, I'll be pretty interested to find out. I'm really just kind of putting two and two together, right? If, let's say, for example, there's a proposal, like, how much should each liquidity provider be getting in the next, 3 to 6 months, 6 to 9 months, and then after that beyond, right? And all that can be discussed. And for example, the one that has the most will at least kind of put it out there. Okay, we have this amount of uni there. Okay, this is our proposal, right? Hopefully you have our vote, you vote for us. Okay, so it becomes pretty democratic in that sense. Like, everybody, they put their piece out there. Then of course another camp will say, okay, this is what we propose, for how long and why, something like that. There's a verbal discussion happening, and then from then the smaller Uniswap token holders, right, can also kind of do the delegation, or for example, at least put their votes out. And I understand that liquidity providing for a decentralized exchange is very important, because at the end of the day, no one can call themselves an exchange if there's no one buying. Or maybe if there are people buying, but there's no one selling, right? There's no units for people to buy. Same thing, vice versa. If people want to sell, but there's no one buying, hence there's zero exchange. So you cannot call yourself an exchange. It's quite a joke if you think about it. So here's my overall view. I think that at the end of the day, based on the existing price and price movement and technical trend, it looks relatively positive for Uni. But if you can kind of wait and see where things will head to in the next few days, because apparently what I'm reading is that in the next few days there will be a so-called announcement on what's the next incentive, because Curve already kind of sucked quite a bit of liquidity because they were very smart. They knew that the liquidity reward was going to end on Uni, hence they came up with their own incentive program. And I think other decentralized exchanges kind of did that as well, because before all this, Uni was doing the best. So now is their kind of opportunity to kind of suck. So hence they say vampire, whatever the term, but it's quite interesting. I said the crypto space is always very amazing. It's very interesting. Actually, back in banking, right, we kind of always saw that, right? Because actually the banks don't really purposely have to know when our customers' deposits expiring. Okay, it's just customers will automatically, you'll see the usual, the aunties and the uncles coming in. Hi, my deposit has already matured. What is the best rate you can give me? This bank A is giving me this rate. Bank B is giving me this rate. What are you offering at the moment? So, if we can kind of compete and if the sum is large enough, we would want that person to stay, right? So hence we will kind of negotiate. But obviously, if it's not within our means to provide a better rate than that bank, and that bank is willing to offer for that customer's amount, say anywhere from 100,000 to 200,000 or even lesser, right? And it's the better, then obviously we cannot retain the customer and the customer will just move on. It's zero loyalty, guys. It's seriously zero loyalty. Hence, for the convenience, sometimes we'll just tell them, Mr. So-and-so or Madam So-and-so, you've been with us for an X amount of years, right? So on top of that, maybe we could suggest a additional incentive, but we cannot give you a better rate. So from then, it really depends on how much inconvenience they want to go through. It's not really that inconvenient. All they need to do is ask for a cashier's order and then, they're on their way. It's just the way it is. It's just the way it is. So to me, I feel this is no different. So I kind of expected that. So what I did was, back to my chart, right? I was DCAing, right? Dollar cost averaging from as early as the 2nd or 3rd of October. I just bought. This was a little bit high. And I was thinking, okay, obviously I always knew that as long as there's a pump, eventually there'll be some consolidation. But you know what? I didn't buy a lot here. This was literally, I think, just a few $100 just to test out. Then this was another $100 to $200 here. Then after that, it got really serious around here. Okay, so here was the day where surprisingly the incentive kind of ended, right around, I think almost, it kind of ended. Okay, and then I sold 50% of it, waited, I was hoping like a serious dip, guys, like literally a serious dip, but I held 50% still. So I locked in some, and I kind of like dollar cost average across these 2 days. So it kind of seems to be picking up for some reason. I was trying to figure out whether there was any incentive, but it seems that there's none. But maybe, if you guys have the insider and you can comment like what's the incentive. I don't see anything at the moment, but you know what? We're all here in this space together. To be frank, do I see a future in decentralized exchanges? Yes, but I would really prefer or hope that there will be assets backing these tokens. Hence, it gets very interesting because I'm actually swapping a digital signature of a tangible item. Hence, I am maybe say using my USDT or USDC to buy or own this at least virtually first, and then eventually I'm able to have the product shipped to me, or I can sign an agreement somewhere down the road to own the actual tangible product. I prefer that, you know what I mean? Because right now we are swapping tokens here and there. All this to me is just speculation, guys. It's all just air for air, right? And to be frank, it may not even be air for air. If you're swapping Ethereum is clearly more valuable than whatever else. You are clearly speculating on that token, hoping that it will go up and you can buy more Ethereum, or at least once you sell off that token X, you can get more Ethereum. And everybody has been playing that game for many, many years, or at least since 2017, if you're even still around. So I feel that if you want to continue in this space, or at least you want to see this space eventually mature, tangible assets have to come into the space and legitimize the exchange. Hence, there is an intrinsic value, even though there is, because guys, these are not stocks, right? These are literally either, we call them crypto assets, hence they have a certain functionality. Maybe it's a governance token where the more tokens you own or the more tokens you lock in, you have the voting right. At the same time, you are providing liquidity for the platform in this case. A lot of various things. I mean, the functionalities or the use case of the tokens, right, is very subjective from platform to platform. I'm not just speaking about decentralized exchanges. They can be even centralized exchange tokens providing you a discount, for example, or this particular token has its main net token come its gas paying token. All this stuff, I don't want to go into it. It's too technical already, and sometimes people just want to gamble. Buy, sell, high leverage, low leverage, it doesn't matter. You want to create a derivative product around it. It really doesn't matter. To me, when I read extensively across the board, Twitter, I look at YouTube, I see the content on YouTube, I see the content on Twitter. Everybody's smoking and see who can smoke the longest. Eventually, you hope that your followers will smoke together with you. That's just how it is. I'll keep that sentence as such, and if you know what I'm saying, you know what I'm saying. Anyway, thank you guys so much for watching. Like I said, if you liked the video and you felt that it was insightful, feel free to give a like to the channel, and don't forget to subscribe. At the same time, if you have not, please subscribe to the channel. We really would appreciate it, and we'll see you in the next video. Cheers, guys.